sir. Hello, Finance Minute family. We are back to our episode 2. Is it episode 2? Episode 3. We're doing it. I can't believe it. So the last time I spoke on behaviors, I unpacked a little bit about what long-term insurance is and the need for it, and what short-term insurance is and the need for it. Today, I'm going to deep dive into, so what is long-term insurance? When we say, okay, I'm a long-term insurance planner, my focus is on long-term, what are we talking about? Well, as the name implies, it's obviously planning for the future. It's planning beyond yourself. It's planning to leave a legacy behind. When I'm done on God's green earth and all I've got is my kids, my kids after me, and I've left my kids, I've got my grandkids. If you're blessed enough, you'll have great grandkids. What sort of legacy have you left for those children? And so you obviously been talking about your long-term planning, as the name implies. Again, it's hidden in the name. So it's anything to do with what happens in the event that I'm no longer here, right? How do my loved ones continue to survive? How do they live? How do they continue to pay school fees? And how do they eat? How do they go to school? What sort of sustenance have I left behind for them? In comes life cover. So there's often a conversation, back and forth conversation between life cover, funeral policy. What is life cover? Are we just talking about death? What is life cover? So life cover is a long-term insurance tool that ensures that in your absence, right, in your financial absence, in your physical absence, that your loved one's standard of living remains consistent as though you would have been here. That's what a life cover is supposed to do. Any decent life cover will have about 4 triggers on it. It'll have what happens in the event of death, right? Who covers my estate costs? Who covers the executive's fees? Who ensures that the money and the resources that I've acquired and my assets actually pass down to those people, right? In order for those assets to pass down, there are certain taxes that need to be paid, your executive's fees, capital gains tax, tax on lump sums. There's all these costs that are borne when we die. Now, a life cover is the quickest way which will pay out a tax-free lump sum to your beneficiaries, if you opt to do so, to a trust, if you opt to do so, to your estate, if you opt to do so. So a life cover, or the death benefit within a life cover, will pay exactly what it's supposed to pay to, or who it's supposed to pay to. It can be a natural person that you nominate as your beneficiary. It can be a juristic entity that you nominate, right? Now, if it pays out to the estate, in comes other solutions. So let me take it back for you. Remember I said, when we talk about financial planning or legacy creation, we don't talk necessarily about the product, but the product should be informed by the need. So the product literally then becomes the solution. So what solution are you trying to solve? So if you want to solve the solution of what happens to my family in the event that I'm not here, what happens to the costs that are borne when I die, what happens to my assets, and them passing down, how will they pass down? In comes the solution, which is the death component of a life cover. Okay, now a life cover can then pay out, or the death component can then pay out in either monthly income towards your financial dependence, or as a lump sum. Okay, now we're going to take it back again. So this payout, ideally, yes, you want the life cover, you want to nominate your children, you want to nominate your mom, you want to nominate your sister. Be cognizant of the fact that minors cannot, in their own stead, inherit any wealth, right? So if you nominate your minor dependent as a beneficiary, that money is most likely going to pay out into the Guardian Fund, which is a fund which is overseen by the government. So we don't want that. So again, in comes a second tier solution, which is a will. So in these segments, I will probably forever keep going back to a will, because every South African who is earning an income, who has assets, who has an income, really, you don't even need to have assets, but for as long as you've got you're drawing an income, you should have a will in place. It is free to draft a will, and it protects your wealth, and it protects your legacy creation. It's a phenomenal tool. Okay, back to the death component. So it can pay out as a lump sum, can pay out as an income. right? Okay, now the second trigger within our life cover becomes what happens in the event that now I'm still alive, but now I've become a financial dependent in my own home. Now I was in a car accident, unfortunately, and I lost all the functionality of my limbs. I cannot actually do my job, or I've had bad thyroid condition. As Zizo, I can no longer speak. My job is about speaking to clients and educating them around financial planning. What do I do to secure that income so that if anything were to happen to my ability to earn my current income and future incomes, that is protected? In comes disability cover. Now, disability cover can be stated in two ways. One, as a lump sum disability, which will normally pay when the illness or when the condition is deemed permanent. In comes disability cover. So disability cover says I've either lost a limb or I've lost the usage of a body part permanently. Then the lump sum disability component is going to pay out, right? So these cover myriad of conditions. In comes the secondary component of the disability, which is our income continuation benefit. So the income continuation benefit comes in and says, okay, well, we don't know that this condition is temporary. We don't know if it's permanent. For now, we're just undergoing investigations. But either way, I've been booked off and I'm unable to work. So an income protection will oftentimes have a waiting period. In fact, it will always have a waiting period. Waiting period from as low as 7 days to as high as 6 months or maybe a year. So what that means is that you need to have been booked off for whatever that waiting period is. And then it starts to pay from a day after your waiting period. So if your waiting period is 7 days, that benefit starts to pay from day 8. All right. So again, you need to come in, you need to speak to a specialist who is aligned to a 7-day waiting period. Is a 30-day waiting period better, or a 6-month waiting period? Right. So disability income, income protection, those are your income or income protection solutions. Third trigger becomes your severe illness benefit. So severe illness is sometimes referred to as critical illness benefits, sometimes referred to as dread disease cover. All of it literally just speaks to dread disease, or so a cancer, your stroke, or thyroid condition. You've got a pulmonary embolism. You've got, again, over 300 conditions are covered by this. So the only way you will know if your condition is covered is when we put through a claim to the insurance company, and then they will come back to say, okay, no, this one will pay out at stage 1 severity. So it pays according to the severity of your condition. It is also a wealth creation, not a wealth creation tool, but it's also an income protection tool, because oftentimes we then just rely on our medical aids. And as we know, if you have a medical aid, you would know that sometimes the funds are limited or there are certain restrictions. So your typical medical aid will then say, for this condition, we'll only cover up to 300,000 Rand, or we'll cover only up to 250,000. But even there, then you must use these specific medications. So medical aid and severe illness benefits tend to then work together when it comes to that. Okay, so either way, it is a way to ensure that you've got a tool in place that is able to assist you in the event that something comes and disturbs your ability to earn an income in the short term, in the temporary, or in the permanent. So a life cover should ideally comprise of all these factors. I'm not going to go into the bells and whistles to say, oh, but Discovery says this about their life cover, or Old Mutual says this, because none of that matters. If you understand what this is supposed to do, then we can always skin it and tie it in various ways, depending on what your specific needs are. So not everyone is a candidate for Discovery. Not everyone will be aligned with Old Mutual. Not everyone will be aligned with Liberty Life. So it doesn't matter which company then you go with. What is important is for you to understand, why do I need life cover? What is life cover supposed to do? What is supposed to be on my life cover? Do I qualify for a death benefit or disability or severe illness benefit? And why is there a start date to disability benefit? Why does it fall off at the age of 65? So if we understand what these products are supposed to do, we minimize you paying on insurance just nilly-willy. You're then able to align your goals to the solution. And that's what we do as Finance Minutes. Tot ziens. Thank you and goodbye.